Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a flag pattern here on gold. So first off, let's place a stop just to be safe. So that'll go down here. Now we're trading 3 contracts on this one just because of the size of the trade and the distance of the stop sizing. So the first target we're going to take off at 1192.4 just like normal, and we're going to take 2 off there. And then the final runner target is just going to go up here, 1195.6, and we'll take 1 contract off up there. Now this one, let's front run that a little bit as well. There we go. So the overall move here, the way that we're kind of looking in terms of just gold in general, we have been having a pretty steady rise higher, but we've been met with a little bit of consolidation, a little bit of a fade, and now we finally rocketed back up to the upside. So this is kind of the continuation of this already sort of up-biased move. Now, because of that up-biased move, we're definitely looking for continued long. That's just kind of how this works. And the fact that we had such a nice-looking flag pattern on the way back, really hard to stay out, that's for sure. So beautiful little flag pattern correction right back to the EMA, and then a really nice clean break and close outside of it. So I like how that looks. I still entered a little bit more conservatively with my buy stop above there, but outside of that, everything else is sitting perfect. It's exactly what we want to see. So looking right now for continued movement back up to the upside, first target at 92.2. We're actually nearing that right now. From our entry, 90.6. If we get that first target, 2 off there will be 16, so it'll be 32 ticks on the first target. And the second target past that, if we do get a big old runner out of it, 95.6, it'll give us 50 more ticks on it. So overall, you're looking at 2 off at 16, that's 32, plus another 50. That's 82 ticks to the upside for only 3 contracts. So definitely not too bad in terms of the movement. It doesn't look terrible at all. So we're just looking for that continued follow through here and see if we can get that move up to 92.2 first. Once we get that area, our stop will move to break even just like normal, and then we'll be looking for continued pressure up to 95.6. So you back in a little bit. I thought it was going to get going right now, but it looks like it's kind of pausing out a little bit. So we'll give it some time here and see if we can get that 92.2 hit. All right, so gold hitting the opening bell, and the immediate reaction as soon as the open hit was downward pressure. If you look, there you can see this big wick down here at the lows. As soon as that got hit, it pushed down from there and actually hit our area to the tick where we were entered in long. Now we hadn't moved our stop yet, but then rocketed higher, immediately rocketed higher. So we got our target filled up at 92.2 because of this excess volatility that we're seeing right now. I don't want to go immediately to break even. I'm going to go just a couple ticks underneath this candle just to be safe. If it decides to come all the way back and hit 90.6 again, once this candle closes, then we'll definitely be looking to, just lock in as is. But I just want to prevent a situation where we get whipped out of the trade unnecessarily. First off, let's not accidentally sell a couple extra. So we've got 1 contract there. So our stop's down to 1 contract. If it does turn back on us, then we give up 2 ticks. But from the looks of it, it's probably not going to happen. So we got that first target without any problem at all. Beautiful move up after a little bit of selling pressure at the open. And now we're seeing continued bull pressure right back up again to pretty much follow this through. If anything, this wick back more so looks like they were coming back to fill some limit orders that maybe missed that initial break of the flag. It doesn't look that unreasonable. The fact that they came back and tested that 90.6 to the tick, again, right there, that screams to me that they were just coming back to fill some limit orders in the same place that we're in long already for the folks who were in the pit. The pit folks weren't able to get in this because we weren't open yet. So it's kind of reasonable to assume, at least in this case, that this little pullback back to 90.6 was just a limit fill for the pit traders. And now we're looking for continued follow through up to 1195.6. That'll be kind of the next area that we're looking for here. So just kind of sitting on hands at the moment. We'll see if we can get that push up. It's been a really strong move so far. No reason to expect it's going to stop now. So we'll give it a little bit of time and we'll be back and see if we can get the target filled. All right, we're back. We came 1 tick away from our target. Stops at break even +1. Because of that, now that we're turning back up again, I'm going to move my stop down here to 93.6. Just wanted to be safe there. Now, normally we would move our stop up a little bit, but the problem was that that candle was just so huge. It's kind of hard to find a good spot when you've got a candle like this. So, usually the midpoint, maybe somewhere around there isn't too bad, or just giving it a little bit more time, which is what I would more decided to do in this case. You get that red candle showing a little bit of bearishness. It turned down and went right back up again. When you start seeing that come right back up again, that little pivot point right there is going to be a pretty big area. So I liked moving the stop underneath that once he started seeing it turn back around. But overall, got all the targets filled. Beautiful move up. I mean, a massive, massive candle. Almost kind of hard to trade with those types of candles if you didn't get in early enough. So that's going to be the trade. Overall, 82 ticks on it. Beautiful movement. $820. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.